Hi, it's Jeremy Harper here, and today we're going to talk about how to get into a property with 5% deposit in 2025. So how do we avoid the LMI? Because that's quite an expensive mortgage insurance premium that can get added to your first purchase and can add to the overall cost of home ownership. So let's take an example. You're trying to buy, as a first-time buyer, a property for $700,000. Now, if you're looking at a 20% deposit, that is $140,000 that you'd need to put down to avoid mortgage insurance if you not qualify for any LMI waiver schemes. So for a lot of renters out there, those trying to put together their first deposit, that's incredibly difficult. So the only options really, and we've previously talked about this, is going through a security guarantor option. If your parents or a family member has security they can put up to help cover that gap. Now, if that's not applicable, because not everyone's in that position, we've got some government schemes that you could look at tapping into as a first-time buyer. So we'll go through those today. And so at the moment, there's some really big changes coming up with the current government for 1 January. But currently, we've got 35,000 places that are available across the country. And at the moment, there's a couple of restrictions on your income. So if you're a single, it's $125,000 or $200,000 as a couple that you're applying for. And if you qualify under that income, and then we look at the price cap. So if you're looking, let's say you're trying to buy something for $700,000 in New South Wales, and it's a capital city per the definition, that would allow you to take advantage of the program up to a price range of $900,000. So if you qualify under that, we can go through and take a 5% deposit, and the government will come in and guarantee that 15% to bridge that gap, save you the mortgage insurance, which could be anywhere up to $20,000 on a purchase price like that, and get you into that first property and into home ownership and get you into that property earlier, off the rental trap. Now, what you need to be mindful of is that 1 January 2026, we're going to see some significant changes to this program. It's going to be expanded out. And so what are some of those changes? Well, number one is the income caps are going to be removed. So what we're finding is a lot of first-time buyers, maybe on high incomes, particularly if they're trying to buy into a city, Melbourne, Brisbane, Sydney, and they're applying as a couple, they'll quite often be above that $200,000. But even though they're at that high income band, after they pay taxes, after they take out living expenses, after they take out their current rent, they still don't have that 20% deposit that they've saved up, because that's going to be a big challenge for first-time buyers. So with their government's removing that price cap, which I think is a fantastic idea, and so it won't penalise those people on a higher income. So it takes away that restriction. And also we're going to see an increase in the price caps. So if you think about Sydney, as an example, currently $900,000 is the price cap. So anything above that, this program is no longer applicable. That's going to 1.5, which is going to allow people to actually buy properties that they deem a property they want to live in. Perhaps it's a couple, maybe a young family, and they want to stay in there for some time. So I think that's going to have a huge positive impact on where people can buy and what they can actually look at as suitable, as opposed to trying to buy something within their price range that's not suitable. They need to then sell or move out of that in a short period of time. So you'll be able to locate hopefully a property that is suitable for a growing family, be in there for 5-10 years plus before they need to upgrade, and it gets them on the pathway to home ownership and starting to generate some wealth through property. The other things to think about is they're going to be expanding who's eligible. So it's not just for couples. If you've got a friend that you want to buy with, or perhaps a brother or sister, you don't have to be in a spousal relationship. You can also expand that out from just being Australian citizens to permanent residents as well. That will be as part of the program. And also you could have owned property before. And if you're outside that 10-year window, so let's say you had a property 15 years ago, you had to sell it because there's a relationship breakdown and you're trying to get back into the market, this will now be applicable. So the flexibility around these changes that are coming 1 January will allow a lot more people to be eligible for the program. Because when rates went up, what we found is the rules didn't significantly change, and this program that was really suitable in, say, 2021, 22, when interest rates went up, people were not able to qualify for this program purely from the serviceability when you had those income caps in place. And then when prices of properties have gone up, people were just trying to take advantage of this 5% scheme, not eligible, and then so what you're finding is those 35,000 places were not getting taken up. If you go back a few years ago, they were completely exhausted out. That's not the case anymore. So I'd anticipate for 1 January, once we see these changes come through and it opens up who's eligible for it, more people will take advantage of it. And I think it's a great idea. People have been renting for a number of years and that's not what they want. And this could be a really great option for you. So just before we wrap up, there's also a few things to think about. Security guarantor, we've discussed that on a previous video. If you do have a 10% deposit and you're in a right industry, we can also look at LMI waivers up to 90%, even 95% for some lenders. If you work in the right industry, medical, teacher, nurse, police, there's quite a bit of flexibility around that. So if you don't want to take advantage of this program, which would tie you in with the government into that program until you release that in the future, then you could look at a lender specific product that may also be suitable for your needs. But if you want to discuss further, please reach out. Another video from Jeremy Harper, and hope you have a great day. Thank you.